G'day everyone, welcome to the final weekend update for 2014. We'll take a couple of weeks off and resume early in the new year. The Christmas rally that normally occurs at this time of year, not always, but generally occurs, it appears to be well and truly on now. We had a little bit of weakness in the US market at the start of the week, but it finished very strongly with three very powerful days and closed almost on its all-time highs. So let's have a look at the action for the week. The S&P index ended up gaining 68 points, so it was a very, very strong period. And when you look at the chart, the power of the rebound really tells the story. Markets that are a bit weak or that are topping out do not rebound in this fashion. It was quite stunning. Now, the volatility that we're seeing from time to time is rising. Through most of 2013 and 2014, we saw quite low volatility. The market just kept moving steadily higher, but we're now getting periods of volatility spiking up and more frequently than normal. We had one in October. We had another one just recently with a bit of a crisis in Russia and the currency issues there and the price of oil. So the periodic volatility is rising, and there are a lot of negative triggers out there. There's no two ways about it. But the American economy remains in great shape. The American corporates that members are involved in are in great shape, and the buying remains strong into 2015. So it's all pretty good signs at this stage for a continuation into next year. And I believe that the Fed policy is likely to stay very supportive. One of the reasons the market was a little bit weak at the start of last week was because of the FOMC meeting. People were a bit apprehensive that they might move more positively towards raising interest rates. That didn't occur, and the stock market really took off. So it looks like Fed policy is going to remain very supportive of stocks for at least the next 6 months. Now, the Aussie index, just for the record, it reversed the previous week's losses. Pretty much this was the same. It was up the same amount that it was down the previous week. But nothing has changed in my overall view. 98% of the Australian market is not worth trading from my perspective. There's just not enough reward for risk, and the trends aren't there to support trading, and especially in commodity stocks. Commodity stocks have been very heavily sold down, so inevitably you will see some bounces. I would not be buying into those bounces in commodity stocks because the fundamentals have changed for commodities. Now, there are some bargains in the high growth stocks. So there are some selective stocks that you can buy on some significant dips, and that would be about all I'd be doing in the Australian market. So let's have a look at those couple of charts, and we'll start with the S&P index. So you can see we had a little bit of weakness into the start of the week. So we topped out on the 5th of December. And the price of oil and concern over emerging market currencies and economies really got a hold of the stock market and dragged it down. But you can see once the Federal Reserve meeting was concluded on Wednesday, Thursday and Friday were very, very powerful days, particularly the first two. And you just don't get those sort of snapback rallies if the market is starting to run out of steam, as a lot of people are suggesting is the case. The ASX 200, we had a strong finish was a bit undecided on Thursday, started to rally, got sold down towards the close, but then very powerful on Friday. So things looking a little bit better, but if you look at our market, it's just basically been going sideways, and it finished 2014 at pretty much the same level that it started at. So really no net gains for the ASX 200 for the year. So in stark contrast to so many overseas markets. Moving now to commodities, gold ended up losing $26 for the week, but that was a partial retracement of the gains from the previous week. And it's really the US dollar strength, which we'll have a look at the US dollar index. It's really that strength that's keeping the lid on commodities across the board. Gold really needs to close above 1250 to confirm a new uptrend. I've got my doubts whether it's going to do that in the short term. And as I've been indicating over the last couple of weeks, we've got major support just over $1,000. Copper slipped a bit down to 291, so it's another commodity that's just barely hanging in there, looking quite weak. Crude oil plummeted down to below 55 at one stage, which is just amazing that crude oil could lose more than half its value in the calendar year. But it did recover a little bit and finished the week about 57. The fallout from this is going to be massive. It's only just starting, and it's going to go way, way beyond oil stocks. It's going to affect currencies. It's going to affect economies. It already is. Nearly a quarter of Russia's total income has been lost because half their income comes from oil, and the price of oil has fallen by half. So that's a quarter of the total revenue into Russia has been affected. So that's really quite staggering. So let's take a look at the gold price. So this is the gold price on a weekly basis, just a very simplified chart. You can see we've still got a little bit of a downward trend to the last. When did this start? This really started around about June. So the last 6 months, there is still a definite downward channel in operation for gold. So until we can get up above this 1250 level here, which would be above this little previous peak of October, that would be the first sign that maybe something is changing in gold. But really we need to break out above this level here, around about 1350. I would be starting to feel more comfortable that we're getting a change in trend. Looking at the gold indices, pretty much the same pattern. Really still a bit of a downward bias, and there's absolutely no reason to be wading into gold stocks at this stage. So if you're looking at trying to buy into some of the energy sector, and there's no question that whenever anything is dramatically sold down, as the oil market has been, that it will be oversold, and that individual stocks will be drastically oversold. So there will be some bargains because unlike some other commodities, the price of oil is not going to stay down at this level. It's just completely uneconomic for the vast majority of producers. Whereas if you look at something like copper, there is still quite a lot of copper mines that are profitable at the current level. Copper could fall quite a lot further before before we get to the point where a lot of mines are unprofitable. So crude oil can't stay at this level. It will have to rebound, but you should restrict your view to just the most resilient energy stocks in the market. There's the spot copper chart. You can see clearly there's been a downtrend since the middle of the year. It was trading up around $3.25 a pound. Now we're just down under $2.90. So looking pretty weak. So the overall strategic approach, nothing has really changed since the last few weeks. The comparison between trends in the best stocks I'm talking about. I'm not talking the market as a whole, but if you want to compare the best stocks in Australia and the best stocks in America, the comparison in trends is absolutely stark. It's quite extraordinary, the difference. So from my perspective, avoid buying most of Australia unless you're shorting or you're buying only the very best stocks. I really don't see any value in doing anything else much than that. I'd be avoiding commodity stocks and especially resource service companies because this change is not just short-term cyclical, it's going to go on for some period of time. So resource service companies in mining and in energy are going to have a very, very hard time for quite some years to come. So that's the final rundown for this year. We're now going to get a period of a couple of weeks of relative quiet. But I think there'll be plenty of opportunities and plenty of trading next year. I'm very excited about some new things that we're doing that members are now getting some insight into some terrific capital gain strategies, some terrific income strategies that are very, very exciting. So if anyone who's not a member wants to know more about what we do, there's my email address and website address. Always happy to communicate with you. Wishing you all the best for Christmas and the new year, and we'll talk again soon. Cheers.